What's going on, you guys? My name is Zach Hartley, and in this video, we are going to interview the CEO of Newton. That is the crypto exchange where I keep most of my crypto portfolio. It is also the crypto exchange that I talk about a lot here on the channel. And so in the wake of everything that has happened in the crypto space over the last few weeks, especially with FTX, I've reached out to Newton and we're going to interview the CEO to ask them all of the tough questions. So let's jump right in. Okay, so the gentleman we are talking to today, his name is Dustin Walper. He is the CEO and founder at Newton. He also has a lot of experience. He was the former co-founder and CEO at Akira Health, which was actually acquired by TELUS Health. So really nice exit there. He was also the former co-founder at My Planet. Now the questions that we are going to ask him today are going to be very direct and very simple. First, we're going to start with, is our money safe? How does Newton manage the crypto and the deposits? What is the financial position of the company? How should we as retail investors evaluate these exchanges? And how does Newton make money? We're going to talk about a couple more topics, but that's going to be the key focus of it. Now, before we get into the interview, if you guys are interested, I'm also going to be doing a Calgary-based meetup here with Addy Invest. That is the real estate investing platform that I also use. So if you're interested in meeting me, coming out and doing a property tour, as well as grabbing a couple of drinks, we would love to get to know you, do a little bit of networking. The property tour is a recent investment on the Addy platform. That tour is at 4 p.m. We're doing drinks at 7 p.m. at a bar downtown. The company co-founders will be there, as well as Janine Rogan, another YouTuber and social media person in the finance space. Really, really smart girl. So I'm excited to meet her. Links are down below for the property tour, as well as the just drinks and meetup networking session. So definitely check that out, and let's jump into the interview. All right, Dustin, thank you so much for joining me here on my channel. I am very excited to talk to you, and we've got a couple of things to cover. So first of all, how are you doing today, and what's going on in your world?
Well, Zach, thanks so much for having me. What's going on today is we're just doing what we do every day, which is we're building, we're reacting to whatever the markets are doing. I'm personally watching this whole FTX situation pretty closely, but operationally we do the same things every day, which is keep our service running, work on new features, talk to customers, and just try to have overall a great experience.
Right on. So diving into things right away with this whole FTX thing and Newton. I have personally talked about Newton on my channel for a long time. I personally hold a good portion of my crypto on Newton, and there's a lot of things going on in the crypto world right now. So the first question is my money safe on the Newton platform? And if the answer is yes, how do you know, and how is it safe?
That's a really good question. I think everyone's asking that right now. A lot of the issues we've seen lately have really tied to centralized exchanges. And in particular, they've mostly tied to offshore, unregulated, decentralized or centralized exchanges, and even further to that, to lending practices around things like customer funds. So we saw, obviously, BlackFi recently announced that they were shutting off withdrawals. Previously, we saw 3AC fall over, Celsius, that kind of thing. So I think what we're seeing here is the consequences of having unregulated exchanges like FTX, where when you look under the hood, there's some really bad business practices that are, I think, if the allegations are true, I think criminally negligent at minimum, if not outright fraud. So what we're seeing there is really disturbing. To bring it back to what we do and sort of the Canadian landscape and why it's different. So short answer, yes, your funds are safe. And the reason that we know that is there are a lot of requirements placed on us by regulators that are really designed to ensure that we are solvent. So I think that's the smartest thing that Canadian regulators have done, which is to say, we're going to take the framework that we apply to the securities world, which, if you look historically, has actually dealt with all the same problems, probably just on a not quite as accelerated a time frame. Crypto is like hyperspeed. But if you look back in history, the securities world has seen everything and more that we see in crypto. I mean, Bernie Madoff is a prime example. That was a regulated business falling over. But from that came a bunch of changes to how they do the regulations and oversight and scrutiny. So in Canada, we're registered with the Ontario Securities Commission. And there's a bunch of things that means. So there's actually a document people can download, which is the decision that they wrote about us. It's about 26 pages, so you can link to it later. But in that decision, it walks through all of our business practices in detail. And it walks through things, for example, like if I'm to go down to section, let's see, I think 42, it really talks about how we get our liquidity. So we can't actually, we can't do any prop trading with customer funds, which is what Alameda was doing with FTX. It's not permitted. We actually have to work with different liquidity providers. So when you send an order to us, we have a few LPs we work with. We match orders with them based on who has the best price. We settle usually within 2 business days at the latest. So that's a requirement of our order. We have to work with a custodian that has certain minimum standards. So in our case, it's Coinbase custody. That's separate actually from the sort of main Coinbase retail business. That they have to have a certain amount of net equity. They have to have SOC 2, think type 2. Bunch of requirements there for all of our cold storage. We have to have a hot wallet provider that meets their standard as well. They really wanted us to use an MPC wallet provider, so we use Fireblocks for that. And then, of course, we have to have audited financial statements. We have to have financial controls. We have key individuals like myself and like our chief compliance officer that are registered and vetted. So they actually do background checks. We have to prove that we're not criminals. We've never been engaged in fraud, all those types of things. And that also means that we're held accountable. So if things went sideways and there was intentional fraud of any kind, they would definitely come after us and likely throw us in jail, frankly. So the consequences are pretty severe in Canada for that type of thing. And going forward, one of the things that we're looking at now, and we're actually talking to our auditors about, is can we do Merkle tree proof of reserves? And there's a lot of platforms that have done kind of done a proof of reserve, or they've got an independent company doing the proof of reserve, but typically they're not like auditors that are actually registered and have very particular requirements and oversight. So our financial auditor, we're talking to right now about doing Merkle tree proof of reserves and having them basically attest that that's all done correctly. So that's something we're working on. I don't really have a time frame for it, but it's important that our customers can actually go and verify for themselves that we're holding the funds that we should be.
Now, with regards to that specific topic, can you talk to us in real simple terms? What happens when I put $100 on the Newton platform? Where is that money kept, and how is it handled? And then if I convert half of it into Bitcoin, where is that kept? How is it handled in just basic retail investor terms?
Sure. And we can walk through the whole flow from like when you send us $100, when you buy Bitcoin, how that gets executed. So let's say that you e-transfer us $100, right? That goes from your bank typically to our bank. We have a couple different payment processors we work with for e-transfers, but ultimately it'll end up in either our wallet there, which is held with a Canadian bank, or in our main kind of trust account, which is also a Canadian bank. We use a few different banks. And so that'll basically show up there. If you then buy $100 worth of Bitcoin, we're submitting an order to one of our liquidity partners. We're calculating that, okay, they owe us whatever the equivalent of Bitcoin is. We owe them $100. And then essentially at the end of every day, we add that all up, how much Bitcoin, how many dollars. We decide exactly how much we need to wire them. They tell us how much they're going to send us a Bitcoin. We validate that those records are correct across all the transactions. And then within 2 business days, we're sending them a wire transfer. They're sending us Bitcoin. And the idea there is we don't want to have any ongoing balance with them, right? The requirement for that to be considered settlement is, and it kind of varies, like in the commodities world, I think it's sometimes up to 21 days for, say, oil, if you're trading in oil. But for crypto, they decided 2 business days. So we never have a really big balance with LPs, which is where you could get into trouble if they're, say, on different platforms and trading in different places. So that usually gets settled into our cold storage wallet, right? And then we are constantly balancing between cold storage, which is where the majority of customer funds sit, or customer assets, and our hot wallets, which is really just enough to facilitate withdrawals for usually a handful of days at most. So, and then basically all the cash that we, let's say you sold the Bitcoin again, and you had cash with us, you had CAD, that would just sit in a segregated trust account, which we also will reconcile every day to make sure that the segregated cash accounts have all the dollars that we owe customers, and there's no commingling with our operating funds. And again, that kind of separation is required by regulators as well. So our entire accounting team basically does daily and sometimes more frequent reconciliations, like across all of our different types of assets, to make sure that that's all squaring up.
Now, when you talk about this, it makes me think, like, did these other exchanges or these other platforms have those same regulatory requirements? Like, is that the one piece here that makes you guys 10 times safer? Or like, is that what keeps this all together? How does it compare to these companies that are just crumbling right now?
I want to read you something from the new FTX CEO that was appointed to basically clean up the mess. And he had previously worked on Enron. So this guy has seen some things. Okay. I have over 40 years of legal experience. He talks about his background a little bit, all the things he's supervised. Never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here. From compromised systems integrity and faulty regulatory oversight to the concentration of control in the hands of a very small group of inexperienced, unsophisticated, and potentially compromised individuals, the situation is unprecedented. So they were, FTX US may have been a slightly different story, but FTX.com, they were kind of Bahamas-based company, was basically unregulated. And as they dived more into the accounting, it turns out there really was no accounting, which is just insane. Like I don't know how you can run a company like that, transacting in billions of dollars, generating hundreds of millions of dollars in revenue, and not have fucking accountants. Like it's a basic requirement. And any good accountant would come into a situation like that and clean it up and put the right controls in place, because their professional credentials really are dependent on them doing their due diligence and being part of the solution, let's say. So it's just baffling to see. It's honestly, it's very reminiscent of what we saw with Quadriga, the same kind of thing, where basically it was one guy who was in control of everything. In this case, maybe it was a small group of people. And in that case, Gerald Cotton, no accounting, was commingling funds, got himself into trouble. I don't know if it was intentional or not initially, but then got way out of control, spiraled down, and then ended up where it ended up. So, proper financial controls, proper third-party custody, audited financials with reputable auditors. Those types of things are really basic in the finance world, and having those in place in the crypto world would stop 99% of these types of things from happening. And that's where I think, if you look at, say, Coinbase, for example, they're in a much better position because they're a public company. They're scrutinized very heavily. They have to have external auditors. They have a whole, probably quite a large internal accounting team. They have to do things properly, otherwise it will be noticed very quickly. So I think the TLDR on all this is, I think regulating centralized exchanges makes sense, because I think that's where the risk is. And then from a regulatory perspective, probably need to take a lighter touch with the decentralized, DeFi world, because I think we haven't really seen the same kinds of problems there, because you can't really do this in DeFi. It would be obvious.
Gotcha. Now, you mentioned Coinbase there a little bit, and they're a publicly traded company, so I can go in and I can view the financials and I can get a pretty good idea of what's happening with that company. For a private company like Newton, that feels a little bit more difficult. So as a retail investor, let's assume that you're not the CEO of Newton. How would you sit here and evaluate these exchanges for where to put your money? Like, how do you look at Newton or your several competitors here in Canada and say, I trust this platform over the other platform? What are you looking for, and how should a regular retail investor perform that due diligence?
Yeah, there's a few different ways. So I think that the function that a lot of regulators serve is to say, at least there's a minimum standard that's applied when you are registered. And there are, I think, 10 companies currently registered in Canada. Newton's one of them. Wealthsimple is one of them. BitBuy, I believe, is one of them. Netcoins. So there's a handful of companies that are registered. I would say that's probably step one. Anyone that has not registered or isn't very close to completing that process, I would look at with scrutiny, a lot of scrutiny, because it's required that you do that if you're custodying funds. So step one, that's a good heuristic that most retail, I think, investors can start with, because it is difficult with a private company to really say, okay, how do I know that their auditor was good? In the case of us, we have to use an auditor that would pass muster with IROC. So we have one that's on their approved list. And IROC oversees all the broker dealers that deal with equities and all that kind of stuff. So step one. Step two, track record. How long have they been around? That's usually a good indication of, FTX was, I think, 3 years old at this point. They actually started after we did, which is kind of insane. And look at the track record. Have they been consistently transparent? Have they rectified issues when they've come up? What's the communication like from the leadership team? That's another big one. Obviously, look at their day-to-day practices. I think there are red flags that you can see when there's a problem on centralized platforms. Typically, it has to do with what kinds of products are they offering? Are they offering high yield, lending products where you can't really figure out where the yield is coming from? Saying 10% a year, where is that coming from? How do they generate that? So there's a few different things you can do, but I think step one, you have to make sure that in Canada they're regulated, because that is at least the minimum bar of scrutiny. Being publicly traded helps, but we have the same audit requirements for the most part as public companies. Maybe not quite as intense, but close. And then I think going forward, things like Merkle tree proof of reserve that are publicly auditable, I think will be an important kind of addition to that.
Can you just give us a quick explanation of Merkle tree reserve? I've done some research on it today, and I saw CZ talking about it with Binance the other day. Can you just give us the quick explanation of what it is and how it works?
Yeah, so I'm actually not an expert on this, and so I'm probably not the right person to give a detailed explanation. The long and the short of it is through hashing, basically, it's a way to prove that your balance has been sort of validated against the total pool of assets. So the idea is that we would like to publish a hash on every customer's monthly statement that they can then validate with a validator to say that, yes, this is in fact, these assets are being held correctly with Newton. But again, I'm not an expert on this. Our accounting team is actually leading that charge. So if something I said is technically wrong, then you blame me for it.
Fair enough. I can understand that. With regards to Newton itself, can you share any information with us with regards to the balance sheet and the debt that the company has? Is it profitable right now? Are you bringing in VC money? Can you share any of that information with us? And I know it's private, it's a private company, so sometimes that information you don't want out there, but what can you share with us about the financial health of Newton right now?
Yeah, so I think that's an important question to ask. And we are private, so we don't typically reveal our balance sheet or income statements or that kind of thing. Although the Merkle tree piece would allow us to sort of reveal what our customer assets, what our customer holdings are. In terms of the rest of the business, so we raised Series B that goes back in January or thereabouts. We don't have any debt. That's been a big thing sort of a big bugaboo for me, which is I don't like a lot of debt, especially in a sort of a venture-backed company. Because I think it's a great way to get into trouble, especially when you have like a slow market or bear market. If you get over leveraged, even if it's just like your operating funds, it can lead you to some pretty less than optimal places. We are not profitable at the moment. We were profitable when the market was doing well, but we're pretty tight on our costs. And so really the last 6 months have been around building the product up, continuing to build new features, interacting with our customers a lot, taking their feedback into account for our backlog, and then also making sure that we're trimming out unnecessary expenses. So looking at like our AWS costs, how do we trim those out? Reducing the cost of facilitating e-transfers, which is actually really expensive under the hood. Looking at the ways that we can avoid having to sweep our ETH wallets as much. So really, we're very focused on the operating nuts and bolts of the business to make sure that we're sustainable. And we're not spending money stupidly, and we're not getting into an over-leveraged position that could be dangerous. And obviously on the customer fund side, we're not allowed to do anything with those assets. So that would be a non-starter. You could obviously raise debt, like venture debt, if you wanted to, but usually that's the senior lender. So if you ever get into trouble, they basically can wipe out all your shareholders. So I'm not a fan of that.
No, that makes sense. Can you talk to us a little bit about how Newton generates revenue? How do you make money? You mentioned you were profitable. Can you talk to us about the money side? And then what impact does a decline in crypto prices have on Newton as a business?
Yeah, so that's a great question. So we make money really on the spread. So it's the difference between the bid and the ask. Now, we have liquidity providers, and we're required to use third-party liquidity providers. Like I said earlier, when you send us an order, we match against one of several, and they have their own spread that we then have to mark up a little bit more to make our money. So typically that is basically where we make all of our money, is on the spread. In the future, there might be other products that generate revenue in different ways, but for now, that's it. Decline in crypto prices means that even for the same sort of volume and trading volume in terms of the underlying asset, there's fewer dollars going in and out. So typically declining crypto prices means there's a decline in overall trading volume as measured in dollars, which affects our revenue and it affects everyone's revenue. You can see Coinbase's revenues over the last, probably the last year, or maybe 3 quarters, have been definitely not where they wanted to be. But that's just par for the course. I think a lot of the weaker companies, as we've seen, wash out when that happens. Smart companies basically focus on operational details, focus on costs, focus on building their product up, adding new features, looking for different ways to generate revenue. So that's where we are.
Right on. And I think I got an email yesterday or today that you've got recurring buys coming out. You've got a couple other features coming to the platform soon. Can you just talk to us a little bit about what the roadmap looks like for the next maybe 6 to 12 months? What should people be expecting?
Absolutely. So we don't get into too many far out details because we don't like to promise things and then not deliver them. It's always been my kind of goal. But the things in the short term, recurring buys obviously was a big one. We wanted to get that out the door. There's some big changes actually coming to how we do authentication that'll add some more two-factor methods. So for us, it's really important that we're constantly staying ahead of potential phishing attacks and hackers and that kind of stuff. So we're going to be rolling out basically a new auth system that allows us to offer YubiKey support, so hardware key second factor authentication, web authn, which will be really awesome. That'll allow you to use like Touch ID to do the two-factor. So that's a big one. Staking, we announced. We're still in the process of getting regulatory approval for that, but we're hoping that'll come out pretty soon. That's going to be a big one. We call it right now Newton Earn, but really that's 100% staking, and it's all out of cold storage. So there's no lending involved. It's just the only risk involved is just the protocol itself. So if if ETH went down completely or something imploded, yeah, it would be a problem if you had staked ETH, but that would also be true for just holding it. So yeah, that's one of the big ones. The other piece of it too is we're really trying to build a product that is engaging and where there's more to do even when you're not actually trading. So I kind of hinted at the idea, and it's my Twitter profile now. This character called a nudie. We've been doing a lot of work to sort of make the app a more fun experience, to make it engaging, to make it something where you want to come in every day and check out different information. So there's a lot of work going into things like bringing in like a feed of information. We want to make it more social, so bring some of the conversations people are having across different platforms onto Newton, and make it a place where you can not only trade but also discover information and interact with other people and see what they're doing. So that's a big part of our 2023 theme, and that's something we're super excited about because I think I haven't seen anyone else do that very effectively.
No, I'm pretty excited about that too. Thought that just came to mind here is when we look at kind of what's happening in the industry, it feels like there's sort of two issues. One is the company's not run properly, like the case of FTX, or there's a hack and crypto is basically stolen. Can you talk to us a little bit about, is that a risk for you? How do you manage and mitigate that risk? And how do you handle it if it did happen, I guess, would be what I'm curious about.
And it definitely is a risk. There's never a situation where there is no risk, especially in this industry. And we know for a fact that like, Lazarus Group affiliated hackers are looking at every platform and trying to find holes. A lot of it's like very basic user level phishing kind of stuff. So it's not super sophisticated, but you always have to keep an eye out for those things. So there's a bunch of things that we do internally in terms of our security practices that have allowed us to be pretty robust against that type of thing. But the biggest thing is around risk management, right? So looking at what is actually exposed. So we feel very good about everything in cold storage because of the controls in place, because of the mechanics of how you actually move stuff out of cold storage. That is not really hackable in any reasonable sense. It would be so expensive and so improbable that it's not really our primary focus, although we are required to have a financial institution bond to cover cold storage. So that's kind of like a form of insurance. And then we really try to minimize the amount that we have in our hot wallets, even though we feel very good about Fireblocks and their model, which is sort of like pseudo warm, pseudo hot. We feel very good about it. We also have coin cover insurance to cover our hot wallets. And that really is meant to sort of cover off on the cybercrime category. The thing about insurance that, I think the thing I would caution about, even though we feel good about the coverage we have, and even though that's what regulators require of us, we haven't really seen what those payouts will look like yet. So there hasn't really been a case where these insurers have had to pay out, and we don't know exactly, what they would fight you on. And we hope to never find out, but that is something that I think the industry as a whole needs to look at and scrutinize very closely. But yeah, minimizing the amount that's actually exposed to hot wallets is very important. We do a lot of stuff in terms of how we manage our approvals. Like there's no one person that can go in and move funds around without many other approvers in some cases. We have our own internal cybersecurity team. We do external pen testing. We're constantly watching what behavior we're seeing, people probing us, things that they're trying to do in the platform, et cetera, and constantly adapting. So it is very much a case that where you have to be paranoid in this industry. And we definitely are and have been since the beginning. It's not zero risk, but we do take every possible precaution to prevent it. And, God forbid it ever happened, to minimize the impact of it.
Gotcha. Now, just a couple questions left, more so about the industry in general. Again, back to CZ, he did an interview and he said, this is long-term good for the industry because it gets the bad actors out early. What are your thoughts on that? Do you agree with that long-term? How do you feel about everything that's just unfolded over the last 2 weeks with FTX and Luna before that and XYZ before that? How do you feel about the last 6 months and then the 6 months going forward, I guess?
Yeah, I hope long term that is the reality. I mean, short term it sucks because we were just seeing things kind of getting back to normal again. So we were seeing volumes pick up, interest pick up again, and then have something this big happen. And I think for a lot of people, this unexpected. That definitely is going to set us back for a while. I'm still overall extremely bullish about the industry. And I still feel that same sense of like, this is really, really cool that I felt the first time I picked up, like, I think it was Mastering Bitcoin or something, and was looking at the actual information and details in the protocol itself, and felt like I had not felt since the 90s on, IRC. It's kind of prodding the early version of the internet. I'm still very bullish on the industry. I'm very bullish on the applications. And I think the impact over the next 10 years is going to be massive. I think the question is what happens in the next 6 months? TBD. There's going to be a lot of fallout from this FTX thing. There's going to be a lot more regulatory scrutiny. I think the Canadian model actually will be more broadly adopted. So I think the US will look at doing something similar in terms of how they regulate centralized exchanges. I think we need to fight to make sure that they don't apply the same standards to decentralized protocols, because I think that's where there's a ton of innovation and some very important work to be done. But overall, I still feel great about the space. I think the next 6 months will be just a bit, who knows what's going to happen. So we always take the approach that we're always building, we're always talking to customers, we're always doing new stuff, but we're trying to make sure that we are fundamentally sound as a business. And I think that's key for any of the players in the space. You can't do the crazy kind of stuff that was happening in the bull run, sponsoring stadiums, sponsoring sport teams, all that kind of stuff. We didn't do any of that. You can't do it now and reasonably, be able to call it prudent.
Last sort of couple questions here with regards to Noon. What is, like, when you look at Sam Bankman-Fried and you look at his Twitter and you look at his interviews and you kind of go back, he's like the CEO of his exchange. You're the CEO of your exchange. Were you listening to this guy and going, he's crazy? Or how do you feel about the guy? Did you pick up the red flags early on, or what is your whole take on SBF himself?
Yeah, I don't want to be revisionist and say that like I saw everything coming and look at me, I'm a genius, because I don't think that I did. I thought the whole thing about effective altruism was a bit questionable. It seemed like a way to sort of, shield yourself in this aura of philanthropy, and then go and do, have business practices that are maybe not as nice. But I didn't necessarily see that this kind of thing would happen. I think as more information comes out, it seems to me, and I don't know about the substance abuse issues or any of the other stuff that's being speculated on, but I kind of get the feeling that he may be like a very charismatic sociopath. Because even like yesterday, he was still tweeting stuff where I'm like, do you not understand the situation you're in? Like, you are probably going to go to jail, and it may be for a long time. Like they may want to make an example of you because of how bad this is, right? And he still sort of seems to believe that he can finesse his way out of it, or convince people that he's not that bad, or that what he did was just a mistake. Like, if that was just a mistake, then I don't believe that. Honestly, I don't believe it.
Fair enough. That makes sense. Last two questions. First of all, what do you see as the largest challenge for Newton? And then tell us anything else you would like to share with us. What do retail investors need to know about Newton? What is the message that you want to get out there? And what do you want to tell people?
Yeah, I would say that, we're really excited about the future despite what's just happened. And that's going to continue to be the case. I mean, we're really a company of engineers and designers and product leaders, much more than we're a company of marketers and salespeople and biz dev. Product has always been our focus, and it's going to be what we continue to focus on, because for us, that's what works. We got away with not really spending much in marketing for a long period of time. We do spend some now, but it's really not that much relative to some of our peers. And we'd rather just focus on making our product constantly better. I think people have seen that in the pace with which we're adding new features, improving the overall experience, trying to navigate any of the hiccups on the customer support side to make that smoother. So that's where our focus is and always has been. So that means that regardless of what the market does, it kind of doesn't matter as much. Obviously, revenue is affected. We like it when we're making money, and we will get there hopefully pretty soon again. But we have cash in the bank, and we're good for the next while. What was the second part of that question? Sorry.
What do you see as the largest challenge for your company as the CEO, kind of leading the charge?
Yeah, I think it's just figuring out where the opportunity is and where to put our scarce resources. Honestly, the way we manage the company, we are very careful about our expenses. We've maintained the ability to pivot and to build new things. And so the question is, where do we actually put our resources? And how do we remain competitive versus the Coinbases of the world? Where's our competitive advantage? How are we different? And for me, that's never been about, do we enjoy the moat of sort of being regulated? Because it is a moat. I mean, it's very difficult now to start a new crypto trading platform in Canada because you have to go through a very onerous registration process, a lot of scrutiny, a lot of legal fees, all this kind of stuff. But there is definitely a moat. I've never seen that as being the thing that should make us better or different, right? We want to really innovate on the product dimension. So that's the big thing that we're looking at. What's next? How do we evolve the product in a direction that people are going to love? But that's the biggest challenge and the biggest opportunity.
Right on. Dustin, I want to thank you for your time today. I sincerely appreciate it. It's really nice to I've used the platform for 2 years now, and I've worked with your team just a little bit on a couple of TikToks, but it's really nice to sit down and chat with you and ask you these questions. I was going through these questions before, and I was sitting here thinking, geez, I don't want to answer these questions if it was me. So I really appreciate you taking the time and giving us the truth and the honesty. And I just want to say thanks again, and keep up the good work.
Thanks, Zach. And I honestly appreciate it when our customers and partners hold us accountable, because that's what we're here for, right? So great talking to you, and I'd love to do this again sometime.
Perfect. Let's chat again in 3 to 6 months here. Hopefully the industry's had a little bit of a recovery by then, but I'm excited to get a look at some of the updates coming on the platform here soon. And thanks again for your time, and we'll talk to you later.
Absolutely. Thanks, Zach.